Hello friends, James Stevenson, updating my forecast for the first time since mid-August for Tesla's earnings and earnings per share in advance of Wednesday's earnings release from Tesla and the analyst earnings call. I am joined by my co-host Loki, who is snoozing in his bed but may become active later. We'll see. Maybe if he wants to interrupt me later, he can. So what I want to do is share a screen with you. I'm going to go to Reading View, and it's going to look really cool here. I've got a pretty good setup to walk you through my updated Tesla forecast. So this is going to be tweeted out by me over the course of the next few hours. It takes a while to tweet out 30 tweets in a thread. But I wanted to go ahead and make this video in advance of that to just talk through it so briefly. I'm going to fly through here. So this is my first chart. It just shows you deliveries by model and site. The next chart here is showing you just the sexy vehicles, the S3, X, and Y deliveries by quarter growing over time. These aren't very different than they were in previous quarters. Forecasts. Here's Model 3 and Model Y, looking pretty good for growth over time. And this chart is showing total quarterly production and deliveries. So production is the red line. Deliveries are the dashed line. What you've seen, or what you may notice about this one versus what you're used to seeing, is that the red line is a little bit higher than the dashed line is over the next few quarters. So Q3, Q4, and Q1 as the wave unwinds. That just means Tesla will be producing more than they'll be delivering in those quarters, which will build up more ending inventory. But then in the future, that's going to normalize out as that ending inventory balance becomes more stable. Here's a chart with adjusted EBITDA by quarter. So that's going to go up a lot in the future, I think, as Tesla improves the full self-driving product and is able to charge more for it and get a better take rate on it when people realize how valuable that is to let the car drive for you. Next is a tweet on, or a chart showing how Tesla makes its average dollar of revenue. This is very similar to what it was in prior quarters. The important thing to note here is that regulatory credit sales are a tiny and shrinking portion of Tesla's total overall revenue. Next, a tweet on how Tesla spends its average dollar of revenue will be in my forecast thread. So the important part here is those green bars getting bigger over time. That's been happening for a while, and that's going to keep happening into the future. Here's how much money Tesla earns per delivery. So this number is rising over time, even though I'm forecasting that Tesla will need to reduce prices some, especially in China, especially on the standard range Model Y over the next year or so. After that, we'll see this really tick up quite a lot, again, as full self-driving sells more to more people. Here's the same chart as the previous one, except that it excludes regulatory credits. So you can see if I flip back and forth between these two, it used to make a difference. It doesn't make a difference anymore. Here's a chart on inventory production and deliveries. So what you can see beginning with Q3 2022 is this pink bar here getting bigger and bigger, the ending inventory growing and growing over time. But what's important is that the ratio of that pink bar to the green bar above it, which is the deliveries, is about the same as it's been in prior quarters when Tesla had the wave going on. It's just a little bit higher after you end the wave and carry more ending inventory. This is Elon's CEO Performance Award, stock compensation package expense declared against the income statement over time. That's going to be very, very tiny in the next 2 quarters, and then it'll be gone. It's mostly all been expensed. Here's a chart showing average revenue per delivery versus automotive gross margin excluding regulatory credits as a percent of revenue. So here's how that looks over time. Sort of an interesting look here. So Q3 benefited from higher prices. I'm forecasting for Q4 some lower prices, especially in China for the standard range Model Y. So that accounts for the lower percent you see there. Just trying to keep moving every vehicle Tesla sells and take advantage of a new government incentive that just began in Q4. Tesla would have to lower the price to be able to take advantage of that buyer incentive and be more competitive with other EVs in China. Here's a chart showing average revenue and cost of sales per cash delivery. So this excludes the leased vehicles and it excludes the regulatory credits. So the red bars are giving you revenue per vehicle, the black bars are giving you cost of sales per vehicle. So that's looking pretty good over time. You saw that dip in Q2 from the Shanghai lockdowns, but we should see a lot higher deliveries in Q4. A little over 400,000 is what I'm forecasting. This hasn't changed. This is the same old revenue chart people know and love. Here's an EPS chart. It confuses you because it's next 12 months. It says right up here in the title, next 12 months, but it still confuses people when they look down here and say, hey, 2021, that was last year. Yeah, but the next 12 months after Q3 2021 haven't happened yet. They're about to. I'm forecasting EPS to be $4 over that time period and then about $5 over the 4 quarters that follow Q4 2021. So for the full year 2022, about $5 worth of EPS is my expectation. So if Tesla's trading about $200 right now, they're trading at about a PE of 40 against this year's earnings. And they're going to grow those earnings by about 100% next year. So in 2023, about $10 worth of earnings, maybe $9.50 in 2023, something like that. So that $200 stock price today is about a PE of 21 against 2023 earnings. That's a crazy bargain for a company growing as fast as Tesla is, not trading advice, do your own research, for entertainment purposes only, etc. So this is that same EPS chart again, except on a logarithmic scale instead of on a linear scale. So these straight lines that you see here are exponential because the scale is exponential. So it took a little breather here in Q2 for the Shanghai lockdowns and then resumed. Big time growth. All right, here's Stevenson indicator. There has never been a bigger discount versus Stevenson indicator than the market closed at yesterday. So take that for what you will. I won't repeat the caveats. All right, and then the rest of these are going to be too small for you to see in YouTube, so go check out my forecast thread. I will leaf through these slowly in case you happen to have a 4K TV that shows them in great detail and you want to pause and look at this because for some reason you don't like following me on Twitter and viewing these slides one at a time. So here they are in the video if you want to pause these and take a look at them. Deliveries, revenue per vehicle, some 12-month metrics, some of the stuff I used for those charts, cost of sales percentages by model and site, and Tesla Energy product, which also gives you gross margin percents here. This is how I made that automotive cash sales chart. And this page gives you everything per share. You like earnings per diluted share? Well, why not have the entire income statement per diluted share for every time period? So I've got that here for you if you want to check it out. And here is how you build up to Tesla's EPS. I use this to make a chart. And that's it. That's all I got. So with that, I will return to Loki's bed where he is still doing what he was doing before. And I will outro and say if you've enjoyed today's video, click the like button. And if you're not subscribed to my channel, you could go ahead and subscribe to my channel. If you want to support me, you can do so on Patreon. I only thank one person as my executive producer who joined my channel at the executive producer tier, which is the SpaceX Edition Roadster tier. So thank you for being an executive producer of my channel, Kathy Kitchler, and I will see you in the next one.